The likelihood of reversal from open to close. I mean, could you
Okie
think of a
dokie.
better day to do this market measure?
Well, I can bet a wishful thinking is what I'm hoping for. Yeah, yeah.
Well, wishful thinking, we'll take it. The likelihood of reversal from open to close. Let's see if it covers what we're doing today. A fun study we wanted to do is to see what the probability of closing the opposite of how we opened today. So today we'll do just that using the concepts of conditional probabilities. I mean, it's nice that we have a big up opening today so we can see, hey,
Sure.
what are the chances? Perfect example. So we looked at 2005 to present. Open and closing prices. We computed the conditional probability matrix for the probability of closing up or down given a day where we open up or down. So in other words, we open up, close down, or open down, close up. All right?
Got it. Got it.
Using a conditional probability table, we calculated the probability that SPY will close up given that it opens up. And we found, now remember, we went back and we used 20 years worth of data. Using the conditional probability table, we calculated the probability that SPY closes up given that it opens up. We found that to be around 70%. Closes up after opens up, wrapped right around 70%. Here are the useful conditional probabilities derived from the table. The chance that we close down, given that we open up, this is what we're talking about today, Tony, is 35%. The chance that
65% chance that it doesn't happen. That's standard deviation.
Hold on. The chance that we close down, given that we open higher, is 35%. That's where we live today. The chance that we close down, given that we open down, is 58%. The chance that we close up, given that we open down, is 42%. And the chance that we close up, given that we open up, is 67%.
How long was this study for? I'm sorry, I missed it. Was it just this year?
No. This is 5 years.
5 years. All right. So we've been in a bull market for pretty much 5 years, but I get it. Yep. And that's what it shows there. Because you would think they would be almost symmetrical, right? With a little bit of positive drift.
Yeah, because what's interesting about these statistics here, if you just had these statistics, this is all you ever had, was just this statistic, you would be like, why aren't we always long?
Yes. Yeah.
Because the chance that we close down, given that we open up, is 35%, but the chance that we close up, given that we open down, is 42%, which means there's 7% edge in that, right? And the chance that we close down, given that we open down, is 58%, but the chance we close up, given that we open up, is 67%, then you'd want to be long.
Yes, of course.
So then why am I short?
Because you like a challenge.
Because I like a challenge. Exactly. Hold on, let me just put an order in really fast. Because I like a challenge, Mr. Batista. Because I like a challenge.
That's correct.
We are buying back some horrible sales of some NASDAQ futures, which is good. Notice the chances of closing up, regardless of how we open, is higher than closing down, and that's because we have positive drift. These are the conditional probabilities of a reversal situation. The chance that we close down, given that we open up, is 35%. The chance that we close up, given that we open down, is 42%. Using the figures on the last slide, we see that it's roughly 66% more likely that we will not have a reversal on a down opening, and 91% more likely we will not reverse on an up opening than reverse on each respective up or down opening. God, this is so much fun. These kind of these kind of statistics. They explain a lot of my bad trades.
Yeah, because you're not paying attention here. That's what's happening.
Yeah, they explain a lot of my bad trades. We
spend a lot of money to figure this stuff out. You're not using it.
So takeaways. Given that we open a certain direction from yesterday's close, the chance that we close in the same direction we opened is roughly 1.6 to 1.9 more likely than closing in the opposite direction. Because of positive drift, like Tony mentioned, the chance of closing higher on any given day is higher than the chance of closing lower on any given day. It doesn't hurt that we've been in a bull market. I just want to add that.
Of course not. Right.
Yeah. In a bear market, you're going to go, don't they ever tick up?
That's like telling us, that's like a fable or a story because we don't see that ever.